All right, welcome back. Today's date is March 28th, 2018. This is episode 5 of Rebel Trading Group's podcast. My name is Nathan Oliphant, and with me, as always, is the gluten free Jason Bessing.
The gluten-free Jason Bessing.
Yeah,
How you
so,
guys doing?
so why don't you, just give us a little bit of how we did today?
Oh, let's just jump into it. Today was a volatile day. It was just all over the place. Uh, yeah, it closed somewhat sideways though. The Dow dropping only 9.29 points. The Nasdaq dropping 59.58 points. That's a little bit of a move on the Nasdaq, and then the SPY S&P ending just up 0.79%. Bitcoin finishing very sideways, 0.2% up. So it was a
What's the price of
volatile day,
Bitcoin?
though. The
Price
shit,
of
I
Bitcoin,
didn't
yeah.
get that. I can get that. It's 77,900.
So it's under 8,000 now.
Yeah, still small. So, but it was a volatile day. The Dow was just up and down. I was watching the opening bell this morning, and I was just watching it just go all over the place. I think let me get the exact numbers here. I think at one point we were up like over 150 points,
Let me see.
and then yeah, if you pull up a chart on today on DIA into the Dow Jones, it
It's disgusting. It
it
was up
looks
and
like
down.
it looks like an EKG graph or
Yeah,
like a seismic graph. It's just up and down, just very volatile day,
people
like
were making money.
entire half a percent, 1% swings. So
Let me ask you something.
heavy volume today.
Let me
What's
ask
up?
you something. When do you buy more Bitcoin?
I don't know. I'm not buying more. Personally, I prefer to just keep it in equities. I bought where I bought and I'm leaving it alone. If it goes, it goes. I'm crypto, it's just not my thing. I like the volatility. I like the potential there. It is fascinating. It's just
Are
I don't
are
like
you
just looking
buying
at the chart.
more under 1,000?
No, absolutely not.
No.
No. Now I
Dang.
do have a theory that the bubble will be built again because of like the lack of regulation and the ease and simplicity of market manipulation in this. Someone could come in and buy $1 billion worth of Bitcoin and push it to like a $15,000 coin instantly. You know,
We
but
should short
nobody's
it.
doing that.
We should
Yeah, I
short
don't know.
Bitcoin.
No.
Just want to stay away from it in general.
Yeah, just in general, I'm staying away.
Okay.
So, yes, anyway, sideways day, very volatile day, but closing very meh. Nasdaq continues to just get pounded. Um, Starting to see a little more opportunity there. Like I said in last episode, get your wallets out, put it on credit.
The sideliners, they're coming
Yeah, where
in.
are the fucking sideliners? Where's
It's
Warren?
time, yeah. It's time to put your money in.
All right. Well, we've got a fun episode. We've mentioned it many a times, and it's finally here. Nathan, we're doing dividends.
Woo!
It's a dividend day.
It's a dividend
Um,
day. Wow.
Before we go on,
Wow. Where do we
I just
start?
yeah, it is hard. I was literally thinking that exact thing.
There's so much to talk about.
Um, but I just want to go ahead and precurse it. Like stocks all clicked for me when I learned about dividends. That was the game changer for me. When I first got into it, I was like, oh, it's cool. You buy here, you sell there, and you make a little money. But when I learned about dividends, that was when I was like, okay, whoa.
Hang
So
on.
hopefully it has that same impact on at least one person out there.
A lot of people, like, honestly, when I first started investing, one of the biggest things I looked for was dividend, and a lot of people will call into podcasts and stuff like that asking about big dividend paying stocks.
Hmm.
They pay a big dividend. Well, I mean, like, they might pay a big dividend, but are they gonna have enough growth to sustain that dividend?
Hmm. Yeah, while we hype it up, there are some pitfalls to dividends, and it really depends on the type of investor. But dividends is something that everybody should know about, and some people just don't care about dividends. Before we keep saying the word, Nathan, tell me what a dividend is. You've
Um,
seen it in stocks and bonds and stuff, but you get dividends in your savings accounts. My checking account pays a dividend. Tell me what a dividend is.
let's see. I'm gonna go to Investopedia.
Give me the working man's definition. What's a dividend?
So, I mean, like, if you own a company, they give you like bits of their earnings back as like a dividend check.
Correct.
So what Investopedia says, a dividend is a distribution of a portion of a company's earnings, exactly, decided by the board of directors, paid to a class of shareholders.
Boom.
That's
It's
exactly it.
literally so as mentioned in the very first episode, stocks are required by law to pay the shareholder back in some way, shape, or form. There's three ways this is done. You have dividends, you have stock buybacks, and then you have just the general reinvesting the earnings back into the company to expand and buy more assets and stuff like that. They all have ways of driving value, but most companies that choose to pay a dividend are already well established and they don't have a lot of growth potential due to their size. Like Coca-Cola can't grow that much more. So, one way that they take their cash flow and give it back to the shareholders is through dividend. They've always paid, a pretty nice dividend. Always been above about 3 to 4%. So that's big companies' ways of returning value back to the shareholders, which they are required to do. So dividends are a beautiful thing. It's literally cash deposited back to your account just for holding shares, just for owning that company. You get the dividend.
So, like, sometimes when I buy dividends, dividend stocks at least, and I don't know if this is a true thing, but I noticed that they cut the money comes from the actual stock itself.
Hmm.
Is that a real
Yeah,
thing?
yeah, that actually is. So the money, obviously comes from somewhere. So that money has to come from the market capitalization, the actual value of the stock. So what I'm trying to say is, let's just to use very easy numbers. You got
Yeah.
$1 billion company that made $100 million. They decide they're going to pay out a million of that to shareholders, to a million shareholders. So a million shareholders are going to get a buck, is what I'm trying to say. So that
Yep.
when they pay out that $1 million, that has to come out of their market capitalization. So that cash flow and that loss of money coming out of the company is reflected in the market cap.
So
So
they reduce their share
they will
price.
reduce the share that will reduce the share price about the price of the dividend itself.
Yeah, which is why we look for earnings
That's
per
why you got
share
to be
growth.
careful. That's why you have to be careful. Yeah, exactly.
If it doesn't cover the price of the dividend getting cut, then is it really worth it?
Hmm. And you can tell how much you can tell this based on the earnings per share. If they're making $2 per share each year, but they're paying out $3, well,
That's
they're
something's up.
they're taking they're taking on debt to pay the dividend, and I don't like that. So that's something that you want to watch out for. So just because it pays a good dividend doesn't mean that the company is good. You can't get attracted just by the dividend yield. You have to pay attention to the actual underlying stock. So, how do you know if a stock pays a dividend, Nate? Like you
Well,
say, what, I like this idea of getting cash flow back, I like these dividends. How do I know which companies do and don't pay dividends?
I mean, you could look it up.
You can
That's what I
just
do.
type in blah 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 blah, but where is it? If you're already looking at a stock and you already have a few ideas, where do you find that?
I mean, it'll say dividend yield, and then it'll give it a percentage. It'll be like I think a decimal or some kind of
Yeah,
ratio.
it's in those Instametrics, right? Remember, I coined that
Ooh.
and I trademarked it last
Do I
time,
gotta
and
keep
I'm
using it?
using it.
Instametrics.
Instametrics. It can be mine. It can be the gluten-free Jason Investing
they're in
Instametrics.
they're in the gluten-free Instametrics.
The gluten-free Instametrics. That's exactly where you can find it. You can just by looking at the stock right there, if it has a dividend yield,
Dividend yield.
and that's usually expressed in percentages.
Yeah.
So if a $10 stock is paying a 1% or a $1 dividend, that's a 10% dividend. If it's
Wow.
Yeah, it's beautiful. So,
Where can I get me a beauty like that?
right? So you found your company. And how do you now the biggest you want to know when they're paying the dividends too. That's something that you can use to kind of time your entry and exit positions, and is also a way to go back and look through the history of the dividend. So you want to know the frequency of how much and how they're paying. And if you didn't get a chance to listen to our market research episode, go back and listen to that, obviously.
Yeah, I
But
think.
just to give you a cheater's answer here, Nate, hit him with the site to go to. What is the best way to
Oh,
look at the previous history of a dividend paying stock?
what? Okay, so I just go to the Google search bar and I type. Oh, let's see what I have. Let's do the Dow Jones ETF. So I'll do DIF because I'm lazy, and I'll type in HIST or history, and then Nasdaq.com, and it'll be your stock, or for my example, an ETF. And it shows you the XF date. We'll get into that. The declaration date, record date, and payment dates, and then it shows how frequently they've done it. And it looks like they're on schedule for. Okay, this is a buggy website. I'm sorry.
I know the Dow Jones Average, the
Do they
DIA
pay
ticker
monthly?
symbol, they pay a monthly dividend.
Wow, they pay
Yeah,
monthly
that's it's
dividends.
monthly dividends. It's beautiful.
That's
It's
so
a beautiful
attractive.
thing. Yeah, that just changed the game for you, Nathan,
Yeah,
a little bit. Yeah, she pays a monthly dividend, and it's pretty decent. It's somewhere in the ballpark of 3%,
it's
and
nice.
and like I said,
It's
that's
two
because
percent.
these are 2%. That's still decent for what you're getting. That's really decent. Um, you're getting a basket of 30 of the largest companies on almost on the planet, definitely in the United States. You're getting a basket of the 30, biggest movers in the stock market. Johnson Johnson, Apple, Facebook, Microsoft, Visa, JP Morgan. And because these companies are already big, well established, and have quote unquote growth issues, they kick back all their cash flow to you, the shareholder. So
Yeah, boy.
when you own that index fund, you get those dividends from those stocks. So when you finding out the frequency of how the dividend is paid, there's a few dates that you want to pay attention to. If you're just kind of a set it and forget it investor and you just want to load up on a fund and reinvest the dividends, that's probably the most advantageous way to use your dividends. Just if you're buying the S&P and you get $100 in dividends each quarter and you're just buying more S&P with it, that's a good way to do set it and forget it investing. But if you're a short-term holder or even maybe even a day trader, there's very key dates that you need to pay attention to. Uh, the first one would be your record date, your declaration date, and then your XF date. Uh, the record date is or I'm sorry, let's start with the declaration date.
You want me to
That's
read them
probably a
out?
better
I
place.
got them up.
Yeah, yeah. Hit us with the declaration date first.
All right, the declaration date. It's got 2 points on it. It says the first one is the date on which the board of directors of a company announces the next dividend payment. The statement includes dividend size, ex-dividend date. We'll go into that next, and payment date. And declaration date is also referred to as the announcement date. The second point they have is the declaration date is also the last day on which the holder of an option must indicate whether he or she will exercise the option. This is
Nah,
also
don't worry
known.
about that.
Okay,
Yeah,
we're not doing that.
we're not gonna. Yeah, that's something else. Okay, so your a declaration date is exactly what it says. They're declaring the dividend. The company has said, "Hey, look, everybody, we made so much money. We're giving it back to you. Here's the dividend. Here's what we're paying, and this is when we're going to pay it." Now, to get those dates, there's a record date and an XF date. Okay,
You ready?
your record date. I'm going to start with the record date.
Okay. Okay.
I'm gonna give a simple man explanation and see if there's anything I miss.
Yeah, yeah, yeah.
On the record date, the best way to explain it is it's literally the date the accountants and the bean counters at the company open their book and they say, okay, who's a shareholder because we need to pay them. And that's the record date. They're going through their records and they're looking ba 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 ba. Jason Bessing, gluten free, needs $800.
Check.
Nathan Oliphant, not gluten free, he needs $1,400. Blah 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 blah. And that's how they break down who they're giving their money to. It's the record date. It's in the name. It's not hard to remember. Declaration, they're declaring it. Record date, the date they open their records. It's simple to remember, and it's just terminology.
So when's the last day I can buy a stock before I get the dividend?
Now, the last date.
Oh
This is
baby.
something that we haven't really gone over. It is kind of an elementary thing that everyone should know. A stock takes 2 full trading days, and on that third day, the stock settles. So, in order to be on the company's record books on the record date, you need to purchase the stock before what's called the XF date. So, for instance, to use an example, March 15th, Coca Cola will pay us. This isn't true. March 15th, Coca Cola will pay 50 cents a share to all dividend holders. The 15th is the record date. You need to own the stock before the 13th. The 13th is the XF date, the day that that stock trades without a dividend. So, 9 times out of 10, a company will declare a stock and give you months to pile into it before they pay the dividend. It's not a secret. They don't like go back. They don't go back and say, "Hey, everyone that owned it 6 months ago, pay them. They're the real motherfuckers that own the share." No, they
Loyalty.
say the next not here's the dividend schedule for the next year for all shareholders. Boom. They don't care as long as they're getting their dividend checks on the board of directors and the
Did you
CEOs.
say
They don't give a
dividend?
shit. Dividends,
Dividend.
dividends. But
Dividend checks.
so does that it? Did that kind of make sense though?
Yeah, of
The record
course.
date, the XF date. So just remember it those dates and like I said, it's in the name.
Yeah,
The record date,
you're missing one very very important date.
XF date. I mean, there's the payment date.
That's the one.
Yeah, the date you're actually getting the dividend. And they if I'm not mistaken, they can be very far off. I think Ford's record date is somewhere in March, but it doesn't pay until April or vice
DIA's
versa
DIA's record is on March 15th, and the
every
payment is
month.
on 4/16, April 16th.
Oh, so it's
Yeah.
like yeah. So sometimes it's like right the record date and then payment, and sometimes it's a month and a half to 2 months away. So it really depends. And if you're interested in getting a stock and holding it a little while you're getting the dividend and you're playing some dividend stocks, you really want to pay attention to those dates. And it honestly, Nathan, if I'm not mistaken, if it's just as simple as that.
Yeah. Okay. And one thing I like to
It's
do,
just as simple as that.
if I'm a long-term investor and I see a value, and we'll go over this in our fundamentals episode coming up soon. I thought we were doing fundamentals today for some reason. I don't know.
Yeah, we got a
Um,
plan for that though.
is once I find a company that it does pay consistent dividends that I've seen, and it's got a good PE ratio, I'll buy it the day of what is it? What day does it get cut from the stock?
The XF date is the date that that's a good question, Nathan. Very good question. The date that because earlier we mentioned that it comes out of the market cap and pulls the stock price, the underlying price down with it. You'll get your cash, but the price will come down temporarily. That date is actually the XF date. It's not the payment date. It's not the record date. The XF date is the day that they will take the dividend out.
That's okay. So when I find a company and I see that the XF date's coming up soon, I'll wait till that day and I'll wait till it drops in price a bit, and then I'll
Mhm.
scoop that up,
That's honestly your better bet.
and then I'll wait for the
To
next
miss
dividend.
miss out on your dividend payment if you're about to hop in. Let it pay and
Yeah.
let that market cap drop, and you're going to get a little bit extra of a discount and maybe able to buy a few more shares.
Yeah.
So if you can just be patient, this is a game of patience. If you can just be patient, you'll get what you want.
Yeah. I was talking to CJ about that on his podcast. I said, he's like, why should I retire? Why should I put money in my retirement now? I said, well, are you willing to make a 40-year bet? You're 25 right now. Do you think the market's
Sure.
gonna go down in 40 years?
Over long term, absolutely not. It might go down for a year or
Of
two.
course, it might
Maybe
have
it have a
dips.
5 year patch. We might have a 5 year rough patch where everything just sucks. But at the end of the day, in any recession, a lot of these stocks, if you go back through the history, they have always paid their dividends. A lot of stocks are very good about paying those dividends.
For
And
example,
they've paid them through recessions, they've paid them through hard times. As long as they're getting that cash flow, it doesn't really matter about the stock price. As long as they're getting business and they're having the proper margins and stuff, they're
do you know what those companies are called?
the blue chips.
No, the dividend queens.
Oh, the Aristocrats.
Oh, the Aristocrats. That's what they're called. Yeah,
The Aristocrats.
yeah.
Yeah.
Consistently paid their dividends for what, the past 10 years.
One
Yeah.
of my favorite funds that I mentioned it. I mentioned it as one of my stocks I was watching. I think in episode 2 or 3. I think it might have been 3. I said PEY.
Their
Uh,
doorbell.
all of their holdings have paid a have raised their dividend consistently for at least the past 10 years. So every year, they went from 50 cents this year, then the next year they started paying 55 cents a share, then the next year they started paying 60 cents a share. So the fund PEY owns companies that have done that consistently for at least the past 10 years. And because I'm a value and long term investor,
Yeah,
I
boy.
really like dividends. I like getting that cash flow because it allows me to compound my earnings.
Ooh.
And compounding, if you have any sort of brainstem about financial knowledge, and you know how when you compound interest, it's just a way to continue to grow it. You use that dividend money to buy more shares so that you can get more dividends, and in turn buy more shares and get more dividends. Dividend reinvestment, dripping. It's really a beautiful thing, and it's a great way to generate income.
Dividend
If for some
reinvestment
reason, sorry,
reinvestment plan. That's what it stands for.
yeah,
Drip.
drip, dividend reinvestment plan. And if you're a long-term value investor who just wants to grow your portfolio and build a nice nest egg, don't take this as my personal advice. This is just kind of general rule of thumb. It's not best for everybody, but that's going to be your best bet. Would be to roll that interest over, roll your dividend, roll your cash flow, and just keep buying large index funds. Buy the entire market and keep buying more, and let that snowball effect take place. And before you know it, you'll have a cushy nest egg of $1 million, and you'll be have invested for 20 years.
Yeah, Benjamin Franklin. He's got a quote. It says, "Money makes money, and then the money that money makes money." That's a pretty good way to describe compounding interest.
It's exactly how it is. It's a great way for to look to have your money make your money for you. And it takes a lot of the fear out of stocks. So if you don't have any concepts about stocks and you don't understand dividends, you just think buy low, sell high. You don't understand. Well, if you just own this company for 20 years, they're going to cut you a check every 3 months for the rest of your life. And as long as you hold that stock, you're getting money. And there's a lot of stocks out there that do that. If you pick and choose them right, let them give you that cash flow. Look for cash flow and the earnings potential or the growth potential in the stock. And oh my God, Nathan, you get 18% return on a stock all the while over the course of 3 years, and then you got a 4% dividend each year along the way.
Yeah, it's
That's
pretty
just,
nice.
that's beautiful. It's beautiful. And that happens. It's out there. Go get it.
Speaking of the dividend aristocrats, there's an ETF out there, NOBL, Noble, that's what I like to call it. ProShares S&P 500 Dividend Aristocrats ETF trades an equal-weighted index of the S&P 500 that have increased their dividend payments annually for at least 25 years.
So it's basically PEY, but instead of 10 years, it's 25.
Is that what that is?
Yeah. PEY
That's
is 10 years. Noble NOBL is over the 25 years. That's from the description you just read.
yeah,
So we'll put
exactly.
that in the show notes for you guys, so
That's
you don't have to
exactly what
remember
that
those.
is.
If you like to go back and check those out, those will be in the comments below the video. Um, but yeah, dividends are a
You know what my favorite
great
type of
way to
dividend stocks
great
are?
way to play the markets. What's up?
What my favorite dividend stocks are?
What's that?
REITs, real estate investment
REIT.
trusts.
Explain me a
Oh,
real estate investment trust,
so
Nathan.
okay, so
So
basically
now let's
it's
take our knowledge of dividends and let's start applying it to the yeah, let's start
so
applying
it's
it to the
it's
markets.
it's so you have these tickers out there and they're real estate companies, and there's a tax loophole, I guess, or it's not a tax loophole, it's in tax law. It says they get a tax break if they pay out 90% of their, what is it, income out as dividends,
hmm
and they get a tax break. What is it?
Um,
Like tax
If I'm
free or
not
something.
mistaken, if they pay out 90% of all profits back to their shareholders, they don't have to pay any corporate tax.
There you go.
And I don't know why that is. I have a theory. I hope someone can reach out and give me the answer, but I
Let's
think
hear it.
it's to prevent
Let's hear it.
rapid real estate expansion. Because if you have to take on debt to get more real estate, that's gonna do you get what I'm saying?
Not really.
It's gonna control growth. Because if you're just taking money and you're not paying it back to shareholders, you're just gonna buy more assets and buy more assets and buy more assets and buy more assets. That's all you're gonna do. And that kind of creates monopolistic empires.
Okay.
So if they by agreeing to not do that and only do that through instruments of debt and returning the value back to the shareholders, they pass all that corporate tax onto you because you pay taxes on your dividends. Yes, you pay taxes on the money that you make in the market, whether you're buying or selling a stock or you're getting dividends, you're going to get taxed on it. But because they're passing off all of their money back to you, you're getting that tax burden, not them.
Cheeky bastards.
But why real estate specifically? Why do you like real estate dividends more than other dividends?
They pay monthly. A lot of REITs will pay monthly, and you can time out your dividend payments monthly. To a lot of fixed income portfolios will have REITs in them because they pay monthly, and it's kind of considered a fixed amount of income they can receive monthly.
One of my favorites in that bracket, the ticker symbol next and simply is O. They're it's like
Reality income.
Delaware Realty Income, yeah, Core. They um very well established company, been around for many years, decent market cap, and they call themselves the monthly dividend company because they're just so consistent in paying that dividend. And they put in their prospectus that their strategy is to mold their portfolio of real estate around being able to pay their dividends. So they shift as the markets shift and the times change. They go from owning more like housing developments and more offices, and then they'll change it and then start owning some more warehouses, and they'll diversify their portfolio to make sure that they're able to consistently pay that dividend.
Oh, it's
And
cheap
if I'm
right
not
now.
and yeah, she's taken a beating. All REITs have taken an absolute beating.
I might buy her.
And that's because
She's
we are
cheap.
in the rising interest rate environment. We'll have to get into that in another episode. We're quickly running out of time. But yeah,
I get you.
real estate dividends. Beautiful way to go about generating income and cash flow back into your portfolio. And my favorite thing about REITs, Nathan, is there's different flavors of REITs. Like,
Like
yeah, there's real
industrial,
estate, there's
industrial leasings.
industrials, there's warehouses, there's some that
Yeah,
just own server farms, there's some that lease warehouses to Amazon. You have housing, you have mortgage REITs
we go
that
gambling REIT. I
there's
have that gambling REIT.
yeah, GLPI or
Yep.
GPLI
Yeah.
is a casino REIT, so
I'm
it
up on that,
leases
by the
land
way.
to casinos. There's apartment REITs. I like those because apartments are packed full of tenants that pay their you pay who doesn't pay their rent.
Who doesn't pay their rent?
So there's a lot of different flavors of REITs out there, and if that's a way that you want to get into real estate, personally, I think that's the best way to get into real estate.
Yeah,
Here's my quick. Can I give a quick spiel?
of
Once
course.
again, Nate, I feel like I'm stealing all of it, but I'm
No,
talking
it's
today,
okay.
man. I'm fired up today.
We're good.
I'm fired up
We're
today,
good.
man. But my my little spiel about real estate. If you were to take about $250,000 and say I can either buy a house and lease it to a tenant, or I can put it in the market. If you were to put that into a REIT that yielded 5 to 7% and generated and was able to consistently generate that for you, you also take away so many other headaches. Someone else is managing the company for you. You don't have to worry about the tenant breaking down your wall and taking care of
Yeah.
repairs. You don't have to worry about security deposits. You don't have to worry about damage. You don't have to worry about insurance, flood. You don't have to worry about uh, eviction. All these headaches that come with owning property that people don't understand exists. You could put that into a company that already does that and has done it for many and many and many years and is masters at doing that, and just let them pay you.
Yeah,
and
you're
you get
funding the real estate, so
yeah, you're just buying into their company, and you're still getting a piece of the exact same thing you were going to do, just on a much larger scale. And you have the safety and security of a large corporation to back you,
yeah, and you have liquid. It's more liquid than the actual
and it's certainly
real
more
estate.
liquid than your house. Oh, and it's just it's so many levels. It's better. Now, that, like I said, that's not for everybody. Some people, if you know how to own houses and you know how to lease that, do it. Seize that, use that opportunity, and flip those houses, baby. Do it. But for most people, they don't understand the headaches and the problems that come with that shit, and they just think that they can buy all these properties and it's and then get all this money. So that's my quick little spiel on real estate. You can put that money to better work without having to work and still get that income that you're searching for in the same style and fashion that you're looking for. So that's my quick spiel.
So are you not for like renting out properties?
I'm for it. Personally, I wouldn't do it because I don't know much about it. And like I said, like I just went on, I heard there's a lot of headaches behind it that you just don't want to deal with. And it requires time and effort more so than just paying the mortgage and hopefully collecting your rent check. There's a little bit more to it than that. Your appliances, homeowners insurance, renters insurance, evictions, delayed payments.
Yeah, but like if you get like a good property and you have good tenants, that's like
Oh yeah, it
monthly
can absolutely
income.
work out. I'm looking at it at the very negative aspect.
I guess
But
so.
if you get the good tenants who are well behaved and they don't damage your stuff and they, you know, pay their rent on time every single month and they're never a problem, that's a blessing.
Ooh,
That's an
we
absolutely
should do another
beautiful way.
podcast right now and listen to an earnings call and kind of discuss it.
We'll commentate on it,
Yeah.
narrate. That'd be tough. What you want to do, like the Nvidia one, or like some sort of data farm
Yeah, something.
data?
We could do like yesterday's or something. Find something from yesterday.
Yeah.
Maybe we'll talk about it.
Earn, earnings calls, reports, and EPS.
Yeah.
That's a good one. Calls. That's an episode. That just might. We always.
We could
I
do
like
it
how we come up
next.
with the next idea with the
We could just do it next.
EPS,
Rough it out.
earnings calls.
So leave us a message at rebeltradinggroup at
So it was fun,
gmail.com.
guys. No, so
Tell us your favorite
uh,
dividend stock and tell us why you like it. We'll kind of comment on
yeah.
it. Check our email every day.
So that was dividends. We touched REITs a little bit.
Yeah.
Hopefully, you understand a little bit what dividends are, and hopefully, we didn't make it too complicated. I know it's hard to get numbers and percentages and yields and stuff like that just through audio without seeing it in front of you, but hopefully, hopefully, we were clear enough in explaining it. It's a very simple concept. They use all these terms and dates to keep it kind of confusing. But if you study it and you look it up and you do your research, you realize dividends are a very, very valuable tool to keep um, in your investment tool belt, if you will.
Who's your favorite dividend paying stock?
Ford Motor
Ford?
Company. She's one. I believe she's one of those aristocrats.
AT&T's one. That's one of my
AT
favorites.
and T's on there. Verizon's on there.
Pfizer,
Telecom pays large
Pfizer's
dividends.
nice. They pay a three, almost a 4% dividend on a
There's a lot of
$35 stock.
big companies out there that you've heard of that everybody that household names that pay great dividends and can just generate cash flow. Procter and Gamble, Unilever,
Yeah, Johnson Johnson. Do they pay a dividend?
Heinz, who? Johnson
Johnson
Johnson.
Johnson.
Oh, they're like one of the best dividend payers in the world.
Wow.
Oh yeah, they're phenomenal on their dividends.
I'm gonna check it right now.
And if you own a fund, you get those dividends. If anything in the fund pays a dividend, you get that because you're an indirect shareholder, but you're a shareholder nonetheless, and you are entitled to those dividends. So I hope you take something away and you can get somewhat excited about that
It is exciting.
as much as I did. Now my story real quick. I'll never forget. I was trading Microsoft, and this was maybe 2 3 months in. No idea what a dividend was, Nate. That's how ignorant I was. and I was trading Microsoft, and I bought it and I sold it like 2 days later for small profit. And then I got this alert on my phone that said Microsoft will pay a dividend of 48 cents per share, and I was like, what? So I just looked back, and then I started to do research, and I was like, whoa, wait. You tell me that if I just own a stock, they'll give me money? And sure as shit, that is the answer. They will.
It's it's their thank you for owning
Yeah.
the company.
You are a shareholder. You're a business partner. You take on that risk. Your money is with that company. You take on that risk, you get your money back. You get what you are entitled to.
Welcome to the
That's
stock
what that
market.
is. Welcome to the stock market. Nathan, what are you watching this week?
Shit, I don't know what I'm watching, dude. What are you watching this week?
Oh man, shit, I don't know. I wasn't ready to go from you that fast.
Are you
You know
hoping
what?
I
I
was
got
ready?
my answer. I got my answer actually. We talked about this earlier. Um I am looking to play the General Electric. I bought a call option, a slightly ballsy one, but I bought an out of the money call option on General Electric today. Um, I think it's time, dude. I think it's time. I know we're gonna expect a little bit more volatility, but
All right.
someone is going to find value in this. I'm hoping it's Warren Buffett himself, but the market cap is just still like over $100 billion, and it's trading at like 13.50 something a share, 13.62. It's it's General Electric. If you're willing to take it on the chin for a little bit, I think it's gonna pay out for you.
Take it on
And you
the
know what?
chin for a little bit.
Take it
What
on
does
the
that
chin for
mean?
a little bit.
What does that
You never
mean?
heard taking it on the chin?
No, I've never taken it on the chin.
Surprisingly, it's not a sexual innuendo. I've heard it like plenty of times and just like really taking it on the chin. Like I think that's like a metaphor for like it's being thrown in your face and
Okay.
dripping down. I don't
Okay.
know.
Yeah. Nice.
But all the while, if you're willing to buy this General Electric and wait for her to come back, which she inevitably will, you're going to collect a small dividend the entire way.
So I am watching. I'll tell you one of my penny stocks. Turtle Beach, ticker symbol HEAR. Don't you love that?
Really?
Yeah.
Ticker
Um.
some Turtle Beach.
Yeah. I'm up 23% on that penny stock.
Are they I didn't even know that they were a publicly traded company. They're an embarrassment for one.
Wow.
Why do they have an IPO? Who wants to
Uh,
buy that?
I'm buying it
I
now.
did not know that Turtle Beach.
2014,
If you
13.
if nobody knows, Turtle Beach, they make gaming headphones, engage development, manufacturing, and sale of audio systems, headsets for video game consoles, computers, and mobile devices. They make very good headphones. Don't get me wrong. I've bought multiple Turtle Beach headphones and I've loved them. I have nothing but good things to say about them. They are expensive. You get what you pay for. Um, she trades at 67 cents. That is, surprisingly, that she was up
I bought her
20,
at 51.
21% today at 11 cents a share.
You like
Wow.
that? You like that?
Just absolutely nuts.
That's
She got
insane, isn't
call
it?
options?
Nah, she doesn't.
No, it's a
It's
bitch.
too
I did
low.
not know. Honestly, that made my day. That's kind of funny that they
Turtle
have
Beach,
stock. I always laugh when we bring up Bob Evans stock. I always fucking laugh.
dude. They paid an $8 special dividend
They paid an eight.
last year around May. It was insane.
I will never forget that. And yeah, it ended up going through. They declared it, and then everyone was just like, "No way."
It was. I can.
They
They
even
made up for
declared
the
it.
$8 cut too. So if you invested in that
You
time,
got
like
that
where they cut
dividend.
it, you've made your money back.
Yeah, that's nuts. $8 a share being pulled out of the market cap, and then makes it back on Bob Evans.
Yeah. BOBE
I hope
ticker
someone out
symbol.
there is long on Bob
We gotta,
Bob
we gotta,
Evans.
we gotta, we gotta get some call options or something on Bob Evans. Who is going to Bob Evans?
Old people. All right. Well, I think that's an episode.
Yeah, definitely. It was fun.
Dividends,
We got a lot more
dividends
to
and
talk about.
REITs. A lot more to talk about. It does get a little bit fancier than that. I would like when we have one of our Traders Corner episodes. I would like to
Uh
do dividend capture trading methods in theory. I want to kind of bring that up a little
oh.
bit.
Okay. Okay.
Ways that you can get the dividend without even owning the stock per se. No, that's not really true. But yeah, yeah, I had fun, Nate. This was
You
fun. It's always a blast.
ready to close this out?
Ready to close it out.
Let's do it.
If you'd like, hit them with the email. How do they get a hold of us, Nate? Tell them
All
where to
right.
get us.
It's a Rebel Trading Group. That's two G's at gmail.com. Send us a freaking line, man. You got some questions? You got ask why you should do stuff. We're
Has
not.
anyone sent anything in?
I don't think so. We're not experts, but we're just guys who talk about the stock market.
Yeah, we watch it every day. We talk about it all the time.
Yeah. I mean,
It's on my mind 24 fucking 7.
yeah. We always tell people do your own
So
research. This is just me and Jason talking about the stock market.
if I can't get you the answer, I will openly admit it and I will point you in the right direction, or I will get it for you.
Yeah.
I promise.
One of those.
That is my promise.
All
And
right,
I
man.
won't bullshit you. I will never. I have no plans to bullshit you or scam you. I promise. Now everybody thinks like, oh yeah, that's the first thing a scammer says. But all right, Nate, I had blast.
It was
Episode
fun.
5, dividends, fondled REITs a little bit. I like it.
I love fondling REITs.
All right, Nate, let's do it again on Friday.
See you Friday.
Later, guys.